It's the weekly review for June 3rd to the June 7th. So the first month or the first week of the month of a new month. Okay. So this was the previous week. This is the June 3rd week that closed. But this is the week that we had insight of. So this is the closure of that week. And once this week closed, right, as a bearish candle, we started to formulate ideas. Okay. So this was our weekly range high. This is our weekly range low. We're trading in the premium range. Prior to June 3rd week, we came into an internal range liquidity here, and we had a rejection from there as well. Now, NQ probably looks slightly different, right? A little bit bigger, bulkier down close candle here versus the ES had almost a doji. So what can we expect? So if you look at it closely on a daily or 4-hour chart, from this perspective, from this internal range liquidity here, we had a up close day, which where we closed in this daily gap. Okay, so that may have been a bullish week, right? This is hindsight. So on the 31st, this may have been a bullish, setting up for a bullish week. So weekly profile, we are in a buy program. We are in the premium of the buy program, right? So if you look at it, we're not really in the discount. Right? We're not really in the discount. This would be the discount below 50%. So we're not really in the discount. We're in the premium. So we're going to be taking only short-term scalps, possibly day trades. Okay, weekly profile we talked about, and then now look at the news here. So I'm recording this on June 10th, so this is the news that came out, that's going to be coming out this week, so I don't have to. Just to go back, we had news on Monday at 9:45 and 10 o'clock. Tuesday we had news at 10, Wednesday 8:15 and 10 o'clock, Thursday 8:30, Friday 8:30 news. So all were red folder news throughout the week. Now I want to introduce a concept here called a CRT. This is by a guy named Raid on Twitter. He's a student of ICT as well. So the Raid talks about the concept of market trading in a range, right? So if you look at it, let's go to 1-hour chart. We have a Monday here, Monday low, Monday high. Tuesday was an inside day, and then Wednesday early session we started breaking this, right? Once we broke the Monday session's high, market retested it one more time in the London session and again in New York AM session, and then we reached our ultimate objective, which was this weekly high and the previous high as well. And the market kind of went into consolidation. So if this profile, if you bring back the profile on a weekly chart, so weekly profile, news relevant action, we'll talk about that. But the weekly profile being a Monday being the classic buy, and then followed by a Friday TGIF. So once we identified that the Monday range was broken and the market was in classic buy profile, our accumulation, manipulation, and target POIs, right? So that we would be on a 1-hour chart. So on a 1-hour chart, this is our target, and the relevant POI was that Monday high, right? The weekly relevant POI was a Monday high, right? Now, what does that look like on a 4-hour chart? So again, Friday, so relevant POI being Friday's down close candle, we tapped into it on a Monday at 10 o'clock. Right, so 10 o'clock candle is very important, right? At 10 o'clock, 4-hour chart, right? We tapped that and we kind of wicked below it and closed above it, right? We also filled in this fair value gap, right? Fair value gap, and then Monday we broke the high, so the POI going into Wednesday, Thursday, Friday, because essentially there was no trade Monday, Tuesday. POI was these equal highs here that we tapped and then went higher. So there's just two POI. One POI told us that we're going to be not bearish, right? The other POI confirmed it and took prices higher. Alright, this is a trade that I took today based on Monday's range theory, which I did not follow because I didn't wait for the break of market structures from the Monday range, right? So I didn't follow it. So I'm not really sure why I took this trade. So this is the premise behind it, right? Monday was this, right? This was the Monday, and today Monday late was this, right? So Tuesday, going into Tuesday, we're consolidating under a Monday, right? Under a Monday high here, just under a Monday high. So look at the range as a Monday high, right? Consolidating just underneath of it. Well, this order block was at 7 o'clock. It's not much volatility there, so I'm not counting this as an order block, right? So there's not really an order block here where the smart money bought from, so I'm not counting that. I'm considering this as a Monday, just below Monday high. What can we do on Tuesday? We can spike above it and drop down, or we can break through it and continuation upward. Those are the only two things, right? Tuesday consolidated, we started expanding down, right? London started expanding down aggressively below this low, right? So once we started expanding below this low, right, this low is still intact, right? This low is still intact in London. Yes, we can come up AM session, right? We can come up AM session here and start to flush for this low. That's one possibility. Now let's look at what actually happens. So from this up to this down, we're at 50%, right? London broke below this 50% on Monday's range. What can we do? Can consolidate? Yes, in the Monday range, right? Monday range theory, we can consolidate and then go below. We didn't really consolidate, right? We're looking at a couple things here. So 9 o'clock, big drop, it started moving up. So at 9 o'clock, candle closed above Monday's midpoint, which also happens to be this fair value gap, right? Which happens to be this fair value gap in that discounted, it closed above it. So if Monday closed above it, right, at 9 o'clock, what can you expect to do? We can expect to reach for these highs here. Yes, we can expect to reach for that. These are PD arrays. Before we reach there, if our bias is bearish, we can expect this fair value to be reached, right? Which it did right here. So those are all the things that were given to you by 9:30, right? Those are given to you by 9:30, right? It closed above it, right? 9:30 is here, closed above it, right? And look at that on an hourly, right? Closed above it, right? That was our close. Well, our close is right here. Let's look at that. We closed above, nonetheless, above this high. That was the idea there, that this was the fair value gap. We closed above it. Where can we go next? Into here. So that was the idea on an hourly basis. When the 9 o'clock candle closed and 9:30 opened, right? 9:30 opened. This was the closing of 9:30 candle, right? Closing above this high, that 1 hour fair value gap. Where's the next fair value gap on 1 hour? Right here. So you can expect to go to that. And did we go there? Yes. So if you look at half an hour chart, 10 o'clock was the news jumped up into it. The reason I took the trade is because news jumped up and touched that fair value gap on 1 hour, right? This is the news. Once I saw that, I entered here to go short. Bad entry. Bad entry, very bad entry, because we closed above that hourly fair value gap, which is right here. Bad entry here. High resistance liquidity run. Market structure shifted, right? High, low. High that took out a low, broken here, right? Broken there at 8:45. You go higher. Another low, taken, 9:30. This was the 9:30 candle. So you wait. Do you have another close below that? No, we don't have another close below it. Right. Next candle, 9:35, we close above it. 9:45 we closed below it, right? So you started entering here in a bullish market. You see why that was wrong, first of all. Because you have high that took out a low. High that took out a low was broken through. High that took out a low was broken through. 9:45. We have a change in state of delivery here. You see that? This was the order that they bought on. This was the bought. We used that to go higher at 10 o'clock news. Now the reason I took that trade short and there was no aggressive shorts there is because yes, this was the liquidity. This was the order block that got liquidity, right? We had a change in state of delivery here, right? Change in market structure here. This is what I saw, right? You have one candle close here. You need at least a 2 candle close, right? You have this order block, 1 candle close, 2 candle close, change in state of delivery here. Yes, confirmed. Change in market structure shift, negative. Low took out the high. If that low is broken through, has that low been broken? In here, yes. Then we have a change in market structure, right? But this was not broken here. At 10:10 was not broken here. That's why we had this huge move up. Now, at 11:15, around 11:15, 11:30, we have broken this low, right? We have broken that low. So market could be bearish at this point, but it nonetheless went up. I bought SPY option here. I took profit under here, I think. Somewhere around here I took profit. But that was a bad trade based on the things that I talked about here. The market was overall bullish. The second trade that I took was Wednesday, right? Wednesday, after we saw that Monday session being broken here. Once the Monday session was broken, right, on Wednesday we started breaking above. Let's look at a 15-minute chart. So we broke above, right? And I took this long here. I got in futures trading, took this long here and offloaded here right before 9:30 open, because I had a feeling that 9:30 will create a drop, and it did. 9:30 created a drop, went below, took liquidity, and moved up. What I did with that trade was I started buying down here, right? I started buying down here, thinking that it should take liquidity here. I didn't expect this push down, so I bought call option, right? Once this push started going down, right? Once this candle started printing live market, this was a very bearish candle. So I closed my trade with I think 15 to 20% loss on option. And I got a put option, right? Once this liquidity was taken, the 15-minute closed, my put option was in the negative as well. So another 15 to 20% drawdown, right? But once this candle closed on 15-minute chart, I elected to go long again, because this was a change in state of delivery here, closed above that candle. This is a 10-15 candle. If you look at an hourly chart, this was the 9 o'clock candle closed as doji, like 10 o'clock candle closed very bullish right there, right? And I think I held on to it until this candle, somewhere around this candle, that I offloaded. So I made up some of those losses for that morning, and then it ultimately went to that weekly high, which I should have held on to. But after taking 2 losses and finally accumulating the losses or mitigating the losses, I just took the rest of the day off and did not hold this until here. And then obviously on a Friday we had a TGIF, right? We had liquidity taken, and then that weekly range, it came into that weekly range of the 30% of the weekly range, right? Which is somewhere around here. So 20 to 30% of the weekly range. And once this weekly range formed, I elected not to trade anymore. And then as you can see, it went back and forth, kind of did nothing here. So that was the week of the first week of June.